Welcome to another episode of HDFC Life Presents Life Sessions in partnership with ET Now. Every day, millions of Indians work towards building a better future, buying a home, educating their children, growing their savings, planning for retirement and fulfilling lifelong aspirations. But behind every financial goal lies one essential foundation: financial protection. That is also the thought behind HDFC Life's integrated awareness campaign, Power Your Protection. The campaign encourages customers to move beyond simply understanding life insurance and take meaningful actions towards protecting everything they have worked hard to build. Today's conversation explores exactly that. How do banking and insurance come together to create financially resilient families? How do two trusted institutions work towards one common purpose? And why is protection becoming an indispensable part of every financial journey? Joining me today are two leaders who have been instrumental in driving this vision. Vineet Arora, Product Head, Liabilities, Third Party, ABCP, HNW and GIB HDFC Bank. Lavneesh Gupta, Chief Bancassurance Officer and Executive Committee Member of HDFC Life. Gentlemen, welcome to Life Sessions. Vineet, to begin with, HDFC Bank and HDFC Life are part of the same group. You have the same root, if I may say that. While businesses serve different models, you have a common purpose, and that is the legacy of HDFC to serve the customers, customer centricity. Why do you put customers first, and why is that the foundation for the entire group and for your companies?
Thanks for having us here. As always, we are the customer-centric organizations. In fact, it's the need of the customers, whether from the saving or they want loans, borrowings, or they do want some protection or investment, all are need of the customer. We as a bank are doing this saving, lending, all these things. And protection plans, we are selling our partner companies like HDFC Life. Protection plans for through life. And investment plans also they need for the wealth creation purpose, and these are required for at every stage of the life. So the purpose is we do all the things based upon the customer requirement. We assess their suitability and then pitch for the product. We have different plans which we give basically for helping the customer in meeting their financial requirements.
In today's age, Lavneesh, the financial needs of customers are changing from the first opening of the a bank account, maybe either for kid or for themselves, to the first income, or if you're getting married, or for that matter raising children or planning or retirement. Eventually, it's about building a legacy.
Correct.
What role does life insurance play in helping customers navigate each of these milestones with confidence?
So thanks once again, Sajid, for calling us on ET Now, and it's always great to have with HDFC Bank partnering on this. I would say that customers' needs are evolving. It's not one standard need which is there, but what I see is that the protection continues to remain a constant need at various level of requirements of customer's journey. And how do I define customer journey is the start of his job. When he starts the first paycheck, what does he need? Is he buying the protection plan then? Because at a younger age it's cheaper. It's very important, and I think the mistake which we made in early part of our lives is that if we had bought a life insurance policy of a sizable amount and early in our life, rather than buying a phone, I think that could have been much more cheaper than today what we have bought it, right? So I think protection is one factor which is very constant. It comes at a cheaper price younger in age. As you get married, and of course depending on the time you have kids, your requirements and the needs increase, and those needs can be very, very different from people in terms of home, education. Now, you have various options. People have kids, people don't have kids, but the aspirations are there. So how do you create those aspirations? And those are through saving milestones, through savings product, along with protection. How do you protect those needs? So I think insurance comes in very basically in looking at protecting along with some saving habit coming in creating those aspiration, which is fulfilling the needs of the customer requirements at that point of time. And at the later part of your stage, once you've created your aspiration and savings, you start coming to about 40, 45 plus, you start looking at what you do post retirement. And that's when the need of saving lump sum, looking at what you will do after your retirement. And that's where we have some of those products which work not on protection, and you move more towards lump sum savings or, disciplined savings, which leads to it. Post retirement, now you've kids, you want to create a legacy, create a plan which can lead some legacy for your kids so that they can enjoy post you're gone. So I think it's a very big journey. I have seen on an average a customer buy 6 to 7 life insurance products, depending on the needs in terms of savings, depending on terms of milestones, basis marriage, basis education, basis what his needs in terms of protecting his aspirations of home. I think those are basis the mix of the protection and the savings product. But one thing is very constant, that protection should be taken much earlier, and also you need to plan well for your retirement so that you don't need to look around for any help.
Interesting. You said buy a protection before you buy a phone for your kid.
Yeah, it's very important. Not many people get into that conversation.
Yes.
We need financial goals change, but one thing remain constant is protection, right? Why staying protected just as important as growing wealth? And how have HDFC Bank and HDFC Life come together in helping customers achieve that goal?
I think protection is a need of every customer. So anyone at any age, like he was saying, protection is important. At younger age, of course, a person purchase policy, it is a very lower premium and a higher cover. But that is also required for the benefit of the loved ones. For a longer life, person also needs wealth. So that is required at every stage of life. Earlier is protection particularly for the family members who are younger and for everyone as loved ones. In the other part of life, later part of life, like Lavneesh were talking about near retirement, you need annuity products, because after retirement you need annuity. Also, pension is not available to everyone. I think it's a very good product also. You get annuity on where you get the regular income of that, regular money from that products actually. And also you leave a legacy for your loved ones.
Lavneesh, if you look at today's customers, they expect financial services to be simple, seamless, available whenever they need.
Right.
It's easy access basically.
Yeah.
How is HDFC Life leveraging technology, data, digital, and now AI has come in as well to seamlessly service the customer?
So I think while a lot of people gave credit to COVID for things becoming more digital, and I will break it in 2-3 parts to say where we are in terms of the journey. A lot of our sales and the customer journeys became more digital pre-COVID, and we were lucky to have it. And that is where I think a lot of work which happened along with the bank much before the COVID, which helped us to navigate that very seamlessly without any customer touch point being used where the physical documentation was needed. So I think that is where the first journey of the seamless way and the path where we used to collect so many documents to buy an insurance policy was gone. Having said that, I think over a period of time, let me be very honest, I think insurance industry was not so very heavily data oriented. They never analyzed in terms of looking how to sell and cross sell, which is what is the strength of a lot of FMCG companies, and they look at cross selling, placement of products, where to do it in the stores. I think that journey in the last 2-3 years has evolved a lot in terms of first analyzing the data, using along with the partner. I think in terms of knowing what are the spends, what kind of expenses they do, how do you look at cross-selling basis, the demographic data, looking at the age profiling, looking at the expenses, what they incur, and then coming and using that to generate very simple, easy offers for them, where there's no requirement of any financial or medical requirement for customers to buy. And those offers are called pre-approved sum assured offers, which is in short term called PASA. That helped in terms of using the data to lead to these offers to the customer. Now, once you've done that, how do you reach to the customers? So you have to provide the digital leg in terms of the journey, and those journeys have to be very simplified. It started off with very boxed product approach, where the customer convenience was not there. But then you have to create flexibility for him to choose any premium paying term and what term he wants basis his lifespan, what is his goal which he needs to look. I think those things have changed in the last 1 year or so. Going forward, I see that evolving it much further. As you mentioned about AI, I think things will be, maybe at some point of time an agentic AI model coming in, where it will evolve for whatever data we are using and the offers being generated, and that agentic AI speaking to the customer to sell. While these current processes are being used for more of renewals for back end and back office, I think in next 2 to 3 years we see that as they learn the models and they evolve, I think the customer journeys of buying simplified products will become much more enhanced. So that's where it is leading to.
And that brings the big job to you, right? Because every customer has a different need. They need to be flexible to their requirement. And in that context, how does a bank ensure that customer needs are accurately understood and they get the product what is required by providing awareness and also ensuring there is no mis-selling?
We have a customer suitability matrix where we pitch a customer, we suggest to a customer product which is suitable to him, like protection term, pure term plan, ULIP or annuity plan. Depending upon this, we take into account the age of the customer, income of the customer, occupation profile of the customer, and other host of factors. After that, we suggest a product that this is a product which is suggested for you. Then later on, it depends on customer whether to choose or not to choose. But we give suggestion. This is a product which is suitable to you. After customer decides that yes, I want to go for this product, then from front end it move to back end. We have a pre-conversion verification call. We call it PCVC. We call it in technical parlance, whereby a central person who is not linked to the salesperson, they call the customer, they confirms and updates them all the features, whether they have been told all the features or not features, they are absolutely told. And then if the customer says yes, only then we go ahead with conversion of policy. If anyway we find the customer is not aware about the product features or is not convinced, we immediately drop the policy conversion then and there. Further, we also have other checks. This I am saying at sales stage, first stage, and before conversion even. We have other checks that margin income customer, what are the products which can be sold to margin income customer, like only term plan can be sold. We don't sell any other investment products. What are the products which can be sold to senior citizen? We actually refrain from selling most of the product, and only it's an annuity product which is sell at beyond a certain age. We have a lot of metrics available. Even senior citizen as a proposer or beneficiary, we have a lot of restrictions put up in the system actually. After that, once sale is converted, still a customer has any issue, they feel that they have not been properly briefed. Now everything is there because firstly it is a customer suitability matrix which and after that product is pitched. Then there is a pre-verification call also. All the things have been done. Then we also send policy document also. Still customer feels that he is not convinced with the policy. He can anyway come back to our digital channels, anything branch, anywhere, wherever sourcing channels. And we do look into that areas. In fact, every complaint is very well analyzed by a team who handles that thing. And if you find that anyway things have not been handled properly, we immediately refund the premium back to customer without a blink of eye. And we also ensure that our process is made robust. And I'm telling you, these things are working very well for us. So we ensure, nutshell, we ensure from before conversion, we take a lot of precautions so that it doesn't lead to any complaint, grievance from the customer. Even if grievance comes, we take utmost action, whatever we can take to ensure that these things are not repeated in future. We make further change in the process whatever required, and then accordingly do all these changes, and also compensate the customer by a refund of premium immediately so that he is not inconvenienced.
Lavneesh, financial awareness is increasing, and it's increasing not just in urban cities, but it's moving to tier 2, tier 3, and to the grassroots level there. One thing which is important is the awareness of life insurance, which needs to continue, because our penetration of insurance is much lower
Correct.
compared to international standards there.
Yeah.
But how is HDFC Life strengthening this entire presence in these markets and educating customers, designing solutions for them, and ensuring them that these are unique to those particular markets or particular section of the society or communities? That's the key thing here, right?
Correct. So, good question, Sajid. I think in the last 3-4 years journey, I think HDFC Life has expanded in terms of the branch footprint. We have currently about 700 odd outlets which are there, of which our maximum expansion has happened in the tier 2-3 markets. We have a stated strategy which we mention it in the markets as well, that we are growing a much higher rate in the markets in tier 2, tier 3 than the metro urban markets. Plus the partners, and the major one is HDFC Bank has also expanded in the semi-urban rural markets in the last 3 years. If you look at the branch footprint, the composition of that is almost like 60-40, ruling towards the Suru, which is the semi-urban rural, which constitute the tier 2, tier 3. So the largest partner is tilting towards tier 2, tier 3. We have also expanded in terms of the footprint there. But coming back, how do we work in terms of making the complex product very simplified for that market, is to look at simplified term products, simplified guaranteed products which can be sold, which can be understood well, so that there are no complaints of mis-selling on that side. Plus, from a consumer research, we found that there's a inherent savings habit in these markets, which is they are more a national saving certificate or a Kisan Vikas Patra were the basic rudimentary way that the investments happened in these markets. And that consumer research proves that this is where we need to look at it, and we have those products fitting in the bill with the simplified nature which is there. Plus, what you need to approach is through the Gram Panchayat and those education matrix in terms of looking at how they can understand. Plus the business correspondent, which are the Kirana stores, which are the touch points for these people to reach out for their daily needs, is when they are talking about these products in a very simplified way, which we are looking. Largely, if you go to tier 2, tier 3, this is more self-employed. Are we changing the the means of providing financial or the medical underwriting for them? Do we understand it well? So we have worked on that piece as well to make it more simplified, apart from our product story, which we can look. Also the self-help groups which work very in the microfinance institutions, the women have also participated in terms of this journey, in terms of getting in. So it's a very holistic approach we have tried to take. Are we done yet? I think it's just we scratched in 3-4 years, but there's much more bigger way. I think the two, either in SBI, if I may say, from a banking perspective, or LIC from an insurance perspective, I think they have been well entrenched for a longish time. But the last 3-4 years journeys gives a confidence that the opportunity is very big.
Do these markets also, people in these markets also look at returns as well, because a large portion is savings for them, and they are dependent on FDs, right? In that sense, do you provide products which will provide them returns as well as protection?
Yes, we do have that. So a simplified product like what we learned from the market is the return of premium, which is more of so the feeling is that you're immortal. So you feel that you pay the premium, and whatever you're paying the premium comes back to you at the end of the year, because that's very hit product in that market. But over a period of time, I think people have started looking at guaranteed product propositions also, which is the non-par and the term and the protection line of those products.
We'll move to rapid fire now, with rapid fire, and especially kick one, myth versus fact. Starting off with Lavneesh. Life insurance is only for people with dependents. That's a myth.
Okay, yeah, that's a myth. Totally.
What is the fact?
No, see, I actually, like I said, I think every customer and I said that protection is constant across every walk of life. Whether a person is earning and not even earning, by the way, so even the housewives do buy coverage for themselves. So the myth is that protection should be bought by each and every person. Like I said, even a younger child should buy, as soon as he's into the first job, the first thing he should pick up is not the phone but buy a life insurance, is because he's getting it the cheapest price. So it's not, the myth is that you only buy for dependent, meaning you are only covering for your dependents, is the biggest fallacy which you're doing. I think it's important that protection is the main requirement in your life.
The second one which I have with me is basically, Vineet, for you. Term insurance is expensive. Is it a myth?
It's absolutely myth actually.
What's the fact?
Fact is, term insurance is depend upon age again, I would say. If you start early, what Lavneesh is saying, start early. It becomes quite cheap. If you start early at a younger age, we just starting job at younger age, I think it's quite reasonable. So it's not expensive. But yes, there are different products like return of premium, other products where the premium is high, but you get the premium back paid also. So their products are there. But pure premium, pure protection plans are not costly at all.
The third one which we have often heard is, Lavneesh, guaranteed solutions don't have a place in today's market.
No, that's a perfect myth. I mean, I think HDFC Life is the first, Sanchay Plus has been one of the innovative products in this industry. I think we changed the whole gamut of the industry in the sense of how and why you should buy these products.
Vineet, the other thing which comes to mind is young professionals don't need life insurance.
The same question, other way Lavneesh asked a dependent, I think they also require, but maybe the need is not felt at that time. Maybe I would say myself also. When I started, maybe the need was not felt, but I did purchase the policy. Term plan, I did purchase policy. So I think it is required for everyone. We have all loved ones, dear ones, and the early starting is best thing. But we're talking the pricing of the protection plans is quite cheap at that age, and you can get a longer term also. I think that is a time we should purchase policy immediately. That is the best time, I would say.
Finally, to you, insurance is an expense.
Yes, so it's a. Let's look at this way, that you buy motor insurance today. Everybody covers it because regulatory requirement says so, you buy it. So it's an expense, and everybody feels that if that is an expense, I think COVID taught us that it's no longer an expense. It's a need, it's an asset where the person who's supposed to be creating increasing asset value, which is individual himself, for the earning member of the family, it should not be treated as an expense. Because anything else for depreciating asset, if you're covering, that's an expense. But you're doing it per force because of the regulatory requirement. But if you're covering it for yourself, whom you're fending for the family, and if you're not buying it, it's not an expense at all, in my view.
Lavneesh and Vineet, thank you very much for joining us today.
Thank you so much,
Thank you.
Sajid.
Thank you. Today's discussion reminds us that financial security isn't created by one product or one institution. It's built when banking and insurance work together with one common purpose, helping customers save wisely, grow confidently, and protect what matters most. That is also the essence of Power Your Protection, moving beyond awareness and empowering every Indian to take informed steps towards a more secure future. My sincere thanks to Vineet Arora and Lavneesh Gupta for sharing their valuable insights, and thank you for joining us on live sessions. Until next time, stay informed, stay protected, and continue to power your protection.